Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at one of the cross-currency pairs, the euro versus sterling. Well, what happened in this pair this week? Well, if you recall from last week, the price closed the week. This is the end of last week. Each of these dashed lines represent the start of the week and the end of the week. But anyway, at the close last week, the price was right near the converged 100 and 200 bar moving averages on this 4-hour chart. That was because the price has been trading over a number of weeks in between this range right through here, and the price was near the middle of that trading range. It allowed for the up and down price action through this range, allowed for the 100 and 200 bar moving average to catch up with each other, and that gave traders a barometer for the new week. That is, if the price were to move below, it would be more bearish. If the price were to stay above, it would be more bullish. And lo and behold, if we take a look at the price action early in the week, what happened? Well, the 100 and 200 bar moving averages ended up holding support on not one but two different times over, I guess, 2 different days right here before we started to see a rotation back to the upside. So the support held, kept the bias bullish against those 2 moving averages, and the price moved higher. Now, the move to the upside, what happened there? Well, the price moved above the 50% retracement, or the move down from the high price that we saw here. This goes all the way back to April of 2023 to the low price that we saw in July. 50% came in at 0.8689, and we moved above that level not once but twice. But we did find resistance against this blue line right here. This blue line represents the 100-day moving average. Just an overlay on the 4-hour chart here, and the price moved up within a pip or two of that moving average on 2 separate occasions. We found sellers here in 2 consecutive days, and trading here today. We also seen some rotation to the upside, but then to the downside once again. So where are we now? Well, we're currently trading at 86.52. We're just above the 38.2% retracement level. We could that level is going to be a level of importance. Also, the low price, the corrective low that we saw off of those highs, came down to a level that's somewhat important, I'll call it, at 0.86357. What level was that represent? Well, if we go back to this week right here, the market peaked at this and moved to the downside. We look at this week right here, the market peaked at the level and moved to the downside. We did move above it here on 2 separate occasions, but in between we found resistance there and resistance here against it, and moved to the downside. And in trading this week, the price moved above that level, came back down to it, and now found support against it. So what was once resistance now becomes support, and we'll see if that can play through in trading next week, as long as the price remains above the 0.86357 level. I'm going to give the bias a little bit more to the upside here for this currency pair. If the price moves below that level, then all bets are off. The bias shifts back to the downside. Now let's take a look at the hourly chart, see what clues we have there. We know we have the 100-day moving average on the top side, and it's still overlaid here. We can see how close it got right here and right here, just within a pip or so of that high before rotating to the downside on Wednesday, and then again on Thursday. Trading today, we had a lower high. That lower high can stay below the 50% retracement, which is somewhat bearish. But what keeps the bullish idea intact off of the hourly chart is that the price low here came down to test the 100-hour moving average, and what did we do? We found support buyers against that level to push the price to the upside. We have come off of that level, and we're moving, and with the 100-hour moving average moving to the upside, we do have a easier hurdle for the price to go below that level and start to move lower here in this currency pair. But still got to do that, and until it does that, the bias remains more to the upside, even in the short term here on the hourly chart for the euro sterling. So that's a look at the technicals driving this currency pair on the hourly chart. We're going to be watching the 100-hour moving average on the downside for close support. Below that level, we'll be watching the 0.86357 level. So get below the hourly 100-hour moving average. We're going to look for a break below the 86.35 level to increase the bearish bias. On the top side, the upside is open to the 50% retracement and the 100-day moving average. Get above the 87 level and stay above that level, and we'll look for the 200-day moving average up at 87.27. There's a look at a cross-currency pair for you as we head into the weekend, as we head into the new trading week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.